Welcome back, everyone. The AI revolution really isn't just a buzzword anymore, is it? It's fundamentally rewiring both our physical and digital worlds as we speak. So in today's explainer, we are purposefully looking beyond those massive trillion-dollar household names that totally dominate the headlines. Instead, we're going hunting for 7 high-growth AI innovators that are currently trading for under $50 a share.
And really, this contrast is our entire focus today. I mean, sure, the mega-cap titans are great, but they carry these absolutely massive valuations and really expensive entry points. Compare that with the sub-$50 innovators. These guys offer highly accessible entry points and what we call asymmetric upside potential. Basically, that just means the potential reward could significantly outweigh your initial cost. But, and this is a big but, that absolutely comes with much higher execution risk. It's a classic risk-reward scenario.
So here's our quick roadmap for this explainer. We'll start with voice and auto AI, then move into physical AI and robotics, shift over to enterprise AI, and finally, we'll wrap things up by grounding ourselves with a hard look at strategy and risks.
All right, diving right into Section 1, Voice and Auto AI. We're literally speaking to the future here.
Okay, so before we talk money, we've got to understand the tech driving this space, right? And the big term here is agentic AI. This goes way beyond a simple chatbot that just answers a question. Agentic AI actually acts autonomously. It executes complex tasks and makes self-learning decisions in real time. This tech is the massive tailwind that's pushing our first group of innovators forward.
Take SoundHound AI, for example. Right now, it's sitting right around $8.88. They are positioning themselves as a premier pure-play bet on conversational intelligence just becoming completely ubiquitous. Instead of tapping on screens, their OAS system lets consumers just speak naturally. The AI handles the entire complex, multi-step transaction across restaurants, retail, and cars totally seamlessly. It's really wild stuff. And just look at this growth. It is explosive. SoundHound practically doubled their revenue in 2025 to $169 million. For 2026, guidance pushes that toward $242.5 million, with a very real path to nearly $400 million by 2027. And how are they doing this? Well, they're aggressively reinvesting all their capital directly back into R&D instead of paying out dividends. It's basically an all-out sprint for market share.
Now, if SoundHound is playing the broad field, Cerence, which is sitting near $9.87, is highly specialized. This is a very specific, cyclical bet on generative AI integrating directly into connected EVs. By partnering with massive global auto manufacturers like BYD, Cerence is putting next-generation, large language model-powered voice assistants directly into the dashboard. They are perfectly positioned to benefit from literally every new vehicle rolling off the assembly line. Moving right along to Section 2, Physical AI and Robotics. This is where AI actually steps out of the computer and into the real world.
578%. No, I didn't misread that. That staggering figure is Serve Robotics' year-over-year revenue surge in the first quarter of 2026. You just rarely see this kind of hypergrowth unless a company has fundamentally solved a massive real-world bottleneck. For Serve, it proves their tech is actually a highly scalable logistical solution.
So, Serve Robotics, trading near $9, is turning AI into tangible, sidewalk-roaming delivery robots. They are tackling the absolute most expensive part of logistics, last-mile delivery. With huge partnerships like Uber Eats already locked in, the real magic here is their scaling economics. If they hit full utilization of their planned 2,000 robot fleet, we're looking at a potential $60 to $80 million annualized run rate.
Meanwhile, Aurora Innovation is thinking much bigger. Literally, trading around $7, Aurora is taking autonomous AI to the highways, tackling the commercial trucking industry with their Aurora driver platform. Now let's be clear, this is a true pre-revenue scaler. Their 2026 revenue is expected to be only in the low millions as they validate the tech. But the reason they made this list is the long-term 2030 potential. By offering a true driver-as-a-service model, they're attempting to unlock a multi-billion-dollar logistics market, solving massive headaches like driver shortages, fuel inefficiency, and safety. Super high risk, but the total addressable market is just absolutely massive.
All right, pivoting to Section 3, Enterprise AI. This is all about software innovators helping massive legacy businesses modernize and automate their workflows. Let's quickly compare our enterprise contenders side by side. First up, C3.ai, trading between $9 and $10. Their big moat? A massive $622 million cash position, and ready to deploy enterprise apps, which accelerates AI adoption without forcing companies to build from scratch. Next is UiPath, around 10 to 11 bucks. They are a powerhouse in robotic process automation, and they're actually seeing improving profitability as they manage AI agents. Finally, BigBear.ai offers a much more speculative yet potentially incredibly lucrative edge in defense AI contracts and government analytics.
Okay, Section 4, Strategy and Risks. We've seen all the upside potential, but now we absolutely must be objective about the realities of this market.
Look, because these innovators are prioritizing aggressive, market-grabbing growth, they share some very real risks that you have to factor into your thinking. First off, expect zero dividend payouts. Literally all their capital is consumed by R&D. Second, many are entirely unprofitable right now, relying completely on future scale. Their execution basically has to be flawless, and they are highly vulnerable to macro sentiment shifts. Because of all this volatility, position sizes here should really be kept small and properly diversified.
So as the AI secular trend powers its way through 2026, breaking out of digital silos and into our cars, our streets, and our workflows, I want to leave you with this final thought. When you look at all the evidence we went through today, which of these frontiers, voice, robotics, or enterprise, do you honestly believe holds the most disruptive long-term promise? Which one is going to scale the fastest? Think about how these technologies are already impacting your daily life and where the real friction points are just waiting to be solved. Thank you so much for joining me for this explainer. Keep learning, and I'll see you in the next one.